We have exciting breaking news for Tesla stock. Tesla is up over 2% today on this news. China registered 17,400 vehicle registrations from November 27th through December 3rd in this same week last year. This is the 48th week. You had 11,670 insurance registrations. So this is up big time year over year. And if you continue to see these numbers throughout the remaining weeks of 2023, in which I think we are going to, Tesla is going to smash the estimate for Q4 deliveries. This is the highest weekly insurance registration number for all of 2023. Well, I guess it's tied for June 26th through July 2nd, which you also had the same number at 17,400. But besides that, I mean, this is basically a new record for 2023. So instead of Tesla's deliveries slowing down in China, as a lot of analysts had expected, they're actually ramping higher now. This is fantastic news for all Tesla stock investors. Gary Black wrote on X, "We are sensing a narrative shift among institutional investors towards Tesla being the only investable EV company out there. Competition can't keep up. Falling long-term rates helps long-duration growth names like Tesla most." Guys and gals, I cannot stress this enough. Wall Street is way too bearish on Tesla. Tesla's still down 45% from all-time highs. Tesla's estimates for 2024 have gotten crushed over 40% over the last 12 months for 2024. When rates come down, as we will talk about here in this video, we're now pricing in more rate cuts in 2024, almost a rate cut at every single Fed meeting after March. Tesla will be able to raise prices. As long as we don't see some kind of huge recession that crushes the middle class, Tesla will do fantastic next year. Thus, I think Tesla stock will hit new all-time highs. But that's only my opinion. I'm not a financial advisor. I'm not a financial planner. Come to your own conclusions. If you guys would like to come trade with us live in real time, come pick my brain, come ask us questions, come get notified every time I make a trade on Tesla or any other stock option and or crypto, link down below in the description of this video. Nick Timmerhouse writes on X, "There's more signs of cooling in labor demand. The number of job openings fell in October to 8.7 million, the lowest since the reopening of the U.S. economy in Q1 2021. The ratio of vacancies for every unemployed worker fell to 1.3, returning much closer to the pre-pandemic high of 1.2. This is something Fed Jerome Powell used to talk about a lot, is this vacancies for every unemployed worker. You're now down to a more normalized level." Elon Musk says, "We are highly confident that the Cybertruck will be much safer per mile than other trucks, both for occupants and pedestrians." CarWow UK has given the Tesla Model 3 their Outstanding EV Award. Tesla's labor dispute in Scandinavia has escalated after a union in Denmark said it would no longer transport vehicles to Sweden. The next Chevy Bolt will arrive in 2025, CEO Mary Barra confirms. Tesla confirms the Cybertruck's door buttons are physical buttons and not touch-sensitive ones. Tesla says the doors open with such force that they can break through up to an inch of ice. That has to be one of the most annoying things. I live in Michigan, so sometimes you'll get like rain at night, you'll get that turning into snow, and then you wake up in the morning, your whole car is covered in ice, not even near an inch thick, like we're talking just a little bit of ice with some snow, and you can't open your dang doors. That's the most annoying thing in the world. So that is pretty cool to someone like me. And check out all of this free advertising. In just 3 days, Marquise Brownlee's Cybertruck video is now his 4th most viewed video ever with over 13.2 million views. And this video has only been on YouTube for 3 days. A lot of the viewers to Marquise Brownlee's channel are likely not Tesla drivers. At the very least, they probably had no idea the Cybertruck even existed. So I would say it's really not shocking that Google Trends data is showing the Cybertruck is at the highest level of search trend interest that you have ever seen. At least the partial incomplete data that we are currently receiving. You are also seeing an uptick in Model 3 and the Model Y search trend activity. I think, in my personal opinion, this small start to the halo effect could really propel Tesla into the end of this year and throughout Q1 of 2024 as far as their total delivery numbers. You might actually start to see a backlog for Tesla. Tesla might start to get more orders than they can actually produce on any quarter-by-quarter basis due to the Cybertruck halo effect. That is something that I am starting to expect as we are getting more and more people talking about the Cybertruck, and that would be something that would be very bullish for Tesla's stock price. Back to the point on why Tesla is raising prices in China, probably because lithium carbonate prices in China have plummeted 82% since November of 2022. They probably are getting quite the margin over in China. As per this video, it looks like the front-facing camera on the Cybertruck is really good. Better than any other camera in any other Tesla vehicle that we have on the roads today. We are also seeing a video of the back screen in the Cybertruck, how you can control your settings, your temperature settings, your seat, your air quality, even the music from this back I guess you will, passenger screen. The new 2024 Lucid Air lineup gets significant changes, fewer trims, more options, and lower prices. Hedge funds and institutions today have placed 847 orders via Tesla options, totaling $244.57 million with a positive order value of 79%. So very bullish option activity that we are seeing today. If you take a look at the volume on the call side, that is above the open interest number. That is a bullish sign as well. Volume is 56.29% to the call side and 43.71% to the put side. Very strong across the board today. Tesla stock continues to be heavily sold short, $21.08 billion worth of short positions, down about $1 billion from the high that we've seen around November 29th, but still very heavily shorted. And that fall of about $1 billion in total dollar amount sold short is because Tesla stock has fallen a little bit from the levels we were at towards the end of November. But any rally in Tesla is bad news for the shorts. Tesla is by far the most heavily shorted stock in our markets. I think that in particular sets us up for big gains in 2024. In a little bit of bad news for Tesla's second most important market, China, this article says Moody's cut China's credit outlook to negative on rising debt risks. Moody's downgraded its outlook on China's government credit ratings to negative from stable. Moody's expects Beijing's support and possible bailouts for distressed local governments and state-owned enterprises to diminish China's fiscal, economic, and institutional strength. The rating agency retained China's A1 long-term rating on the country's sovereign bonds. This can also be seen as some good news for Tesla. China's EV car maker NIO jumps 4% after reporting narrower than expected losses. Here are the key points. NIO shares rose on Tuesday after the company reported narrower than expected losses. Investors are focusing on the Chinese electric car makers' ability to be more disciplined in its spending as it charts a path to profitability. This year, China's EV market has been the stage of a price war sparked by Tesla, which has forced car makers to slash vehicle prices and put pressure on margins. So, believe it or not, Tesla's competitors doing well in China is a good sign that Tesla is also going to do well. If Tesla's competition is doing well, Tesla is probably going to do better than expected. Or as the competition is doing good, Tesla is going to do really good. Tesla's global inventory numbers are fascinating. So the Model X, S, and the Model 3 are continuing to fall. They're at some of the lowest levels we have seen in a long time. Your Model Y is at the highest levels we have seen in a long time. This thing goes up a lot, it goes down a lot. Now it's ticking back upwards. Very fascinating. And I don't know why the inventory numbers are so high for the Model Y, although it seems like the Model Y continues to be a hot seller. Maybe production is just really cranked up recently. The latest AI investor sentiment survey continues to show the bulls are in full control. 48.8% of investors are bullish, neutral investors at 31.7%, bearish investors at 19.6%, the lowest numbers that we have seen over the past year. Tesla continues to run about 300 different ads globally, again, a majority of which for the US, some for Europe, and some for Australia. But what I'm starting to notice is Tesla is really advertising their leasing products a lot more now, as you can lease a vehicle cheaper than buying one since you're only technically financing a part of the vehicle. That seems to be an avenue that Tesla is really promoting right now. The percentage of stocks above their 50-day moving average is down about 3.5% today to 72.52%, still sitting at some of the highest points we have been at in 2023, comparable to where we were back in the summertime AI rally. This, I would say, is actually a little bit of good news that you're seeing this come down slightly, because we've just been moving so aggressive to the upside. A slight cool down is actually good news. But here's where things get weird, because what you're actually seeing today is not great. The Russell 2000 is down about 1.2%. The NASDAQ is up 0.14%. S&P is flat on the day, and the Dow's down about a quarter. But wait, your job openings fell to 8.7 million. Shouldn't that be good for Fed policy? Shouldn't that mean the Fed can be more comfortable cutting rates? Yes, but it also means you're on a slippery slope as far as a recession. See, job openings just fell about 600,000 just in the past month. That's a huge decline. That's a sign that businesses are not looking to hire as much, that businesses are probably not doing as well as maybe we thought they were. Take a look at what the markets are pricing in for Fed policy. This is actually insane. So you're still pricing in a pause for December and for January. There's actually now a 16.3% chance that you do see a rate cut in January, but that's not what I want you to focus on. March, you're still expecting the first rate cut. But today, you're now pricing in another rate cut in May. Yesterday, and really, I mean, at all the past months and weeks, years, you haven't been pricing in a cut for May. But now you are today. Yesterday, there was a 35.8% chance of a cut in May as well as March. Well, now today, you're at 41.6%. The odds of a cut in March and a pause in May is 40.9%. So you are pricing in back-to-back rate cuts for March and for May. But check this out. For June, you're pricing in another rate cut. For July, you're pricing in another rate cut. For September, you're pricing in another rate cut. For November, you're pricing in another rate cut. For December, you're pricing in a pause. So you're pricing in a rate cut at this point for March, for May, for June, for July, for September and for November. That's insane. Now, December, it's close. So there's 30.4% odds that Fed funds rates will be in between 4 and 4.25%. There's 28.6% odds that Fed funds rates will be between 3.75 and 4%. So you're getting very close to pricing in 6 rate cuts, because that would be 1, 2, 3, 4, 5, 6 rate cuts. If that starts to get priced in, that's not exactly great. Now, today, you're pricing in, another rate cut in March and in May. That's coming because of the JOLTS jobs report. That's not good. That's just showing the economy is weakening. Recession could be coming. So markets want the Fed to cut rates. It's not because inflation fell or anything along those lines. The ISM Services PMI actually beat the estimates. Take a look at this. So today, your ISM Services PMI came in at 52.7. The estimate was 52. So better than expected. The ISM Services Employment came in at 50.7. Better than expected. ISM Service Business Activity came in at 55.1. Better than expected. ISM Services New Orders came in at 55.5. Better than expected. ISM Services Prices, this is a big one, came in at 58.3. The estimate was 58. So that also beat the estimates. Yeah, this is kind of crazy. I think it's very important for investors to remember this. The recession, or a recession, is ultimately the worst thing possible, right? For interest rate sensitive names, for any name out there, it doesn't matter. Recession is what will cause the crash, the fear. A recession is worse than 10 rate cuts, right? Or a recession in comparable to 10 rate cuts. What's better or worse? Would you rather have 10 rate cuts next year or a recession? Yeah, you'd obviously rather have 10 rate cuts. But if those 10 rate cuts come because of a recession, that's bad. Or if you get 4 rate cuts and no recession, that's better, right, than 10 rate cuts and a recession. So more rate cuts is only bullish if we don't have a recession. If we have a recession, and that's the reason why we're pricing in a bunch of rate cuts, now 6, almost 6, that's not good. TLT is up 1.79% today. Oil is down 1.34%. This is something to be watching as well. Oil tends to trade on U.S. economic activity. So when the U.S. is doing well, oil will be higher. When the U.S. is not doing well, or when it's perceived that we're not going to do well, oil will fall. So oil down 1.34% today is in direct correlation to fears of this recession or a slowdown coming. The dollar, let's go ahead and refresh this. For whatever reason, the dollar doesn't like to update until you actually update it. The dollar is up 0.35% today, which is kind of strange in regard to recession sentiment. The dollar should actually be falling right now, but it's not. Gold is down about 0.5%. That's actually great news, because gold was kind of starting to freak me out. It just kept going higher, suggesting that maybe something was happening under the surface. So seeing gold down today is great news. Overall, though, recession is definitely starting to creep into our markets. Tesla stock is up 1.25% at the time of recording this video. Now, we got rejected at the 100-day moving average today. Tesla stock hit a high of $246 per share. Your 100-day moving average is at $244. Now, is it possible Tesla does, see some kind of crazy rally towards the end of the day today or in after hours today? Sure, it's possible. But you're probably not getting above that 100-day moving average, at least today. But what we've seen today was Tesla can rally. A lot of people have said, specifically in the comment section of these videos, they're so sick of watching other stocks do well and Tesla is not. Today shows you that Tesla can do well. And I expect Tesla will do very well as interest rates do fall, as we, what I believe, ultimately avoid a recession. Think about it like this. The government is not going to let Trump or anyone else have a free pass back into the White House. right? If we have a recession, that's what happens. The current administration will no longer exist, right? They will no longer have office in 2025. So their most important job there by the government is keeping the U.S. out of a recession. So, we would probably get 10 rate cuts or rates going back to zero before we ultimately got a recession in 2024. I think that is, in the end, good news for Tesla. Now, Tesla stock solidly holding above its 50-day moving average today. That is also great news, and I expect that. I think we're kind of in a trading range here for Tesla until something does change, until the narrative changes in the markets, or until we get some really, really good or really bad news for Tesla. I'm not expecting a whole lot. The data coming out tomorrow could be important, and obviously Friday's data is going to be really important with the non-farm payroll report and the unemployment rate. That is when I think we could break out of this range above or below the 50 and 100-day moving average. Now, if you're looking at the RSI, Tesla's pretty much neutral with an RSI of about 54. So nothing to really say there. I think the stock could easily move higher rather than move lower, because under 50, you're going to be in kind of this bearish sentiment zone, this oversold sentiment zone. And I don't think that's justified given what we're expecting with Fed funds rates and even the economy still. I mean, that was one data report we got today with JOLTS job openings. Tesla blew away expectations for insurance registration numbers as far as Wall Street analysts. So Tesla should actually be up a lot more today, in my personal opinion. Now, taking a look at the MACD, the yellow line is still above the blue line. That is good news. Although you are trending upwards, you are kind of trending sideways at the same time. The gap is becoming more narrow. When the yellow line goes under the blue line, that's where potentially you do set up for some downside, but really, I'm not expecting that right now, but we'll see. Recession fears are the thing that could give the market some downside. So if the data coming out tomorrow is bad, we're going to have a big problem. And we're going to talk about that specifically coming in the video at 8:30 p.m. tonight. You do not want to miss that video. So that is going to do it for this one. Hit that like button and subscribe to the channel if you guys have not done so already. And if you made it to the end of this video, you should consider sticking around a while and promoting this video to as many people as possible by subscribing to the channel and hitting the like button. Now, if you guys want to come trade with us live in real time, link down below in the description of this video for the trading community. We will welcome you with open arms, whether you are very experienced, you've been in the markets a long time, or whether you are brand new, you've never bought an option a day in your life. That's a great place for anyone and everyone. So that is it. My name is Michael Tyler. Enjoy the rest of your day, and I will see you at 8:30 p.m. tonight, Eastern Standard Time.